The global outlook from here. Filippo Rima of Credit Suisse joins in to talk about that. Filippo, good to have you on the show. Does it seem like the global rally may be faltering, or do you think there's more strength for equity markets after a pause?
Well, good morning to you. I think first of all, we have to put the rally into perspective. We started 2 weeks ago from very oversold level and very depressed investor sentiment. We got a couple of good news from the financial industry and out of China, and this is why we are seeing this rally. I think in some areas we went up 30–40%, some sectors. Overall the markets are up 20%, so over the very short term, a pause, a pullback will not surprise me.
Filippo, morning. Do you expect to see more weakness in the dollar? Because last few days the dollar complex has come off quite significantly.
I think our outlook long term for the dollar is definitely negative. This is really the outlook over many years. In the short term, it's really difficult to predict the dollar. The experience on the quantitative easing that should put pressure on the currency in the US dollar. On the other end, as the deleveraging will continue in the industry, I can imagine that we will see some strengths coming for the dollar. So it's difficult. I think volatility will stay there. I don't expect the dollar now to go heavily down or to move up heavily. So I think we will remain heavy, let's say, volatile, but around these levels.
What does that mean for commodities, Filippo? Because last few days, as the dollar is weakened, we've seen a good pullback in commodities and even commodity stocks. How would you position yourself in that space?
I mean, commodities, we have to differentiate. I think we like the precious metal and the gold. There are several reasons speaking for gold. I think one complex which is looking more and more interesting is the energy space. And this, keep in mind that the global imbalances in the energy area, especially talking about oil, are getting bigger and bigger. So as soon as the slowdown will be over, we will see a very tight energy market, and I expect the oil price to anticipate that by the end of the year. Definitely we should see much higher level in the oil price. In the basic commodities, on that side, I think the slowdown in the economy is putting some additional pressure, and on that side we are really a little bit more negative than on precious metal and on the energy complex.
There is a view, though, that all this indicates risk aversion is easing off a little bit, and maybe there will be higher money allocation to emerging markets like India. Do you see that happening right now?
I think we don't see it happening right now. I believe that the long-term story goes clearly in the direction of Asia and on the emerging markets. Over the short term, I think what the investor outside of India are waiting for is definitely the election. I think that will be a major trigger for your market, and the investor are still a little bit risk adverse. So I cannot see the investor putting a lot of money into the emerging markets, but over 3 to 5 years, definitely this is the place to put our money. We are very, very confident on that side.
We have earnings season as well in a couple of weeks. Any particular sectors that you're more bullish on in the Indian context?
I'm not an expert on the Indian market, so I would like not to do some prediction on the Indian market, as not qualified for that. Sorry.
Over the last many months, in fact quarters, Filippo, we've seen a lot of redemption-led pressures globally into most emerging markets. Do you think that's waning, or that is seen the worst, or do you expect more redemption-led pressures for most funds, emerging market funds, and even hedge funds?
I think most of the pressure is behind us. We have quite a big amount of money invested in hedge fund. At least the hedge fund we are talking to, they say that 80%, so 80% of the deleveraging should be behind us. It's difficult to time when that will be over. So it can be that we have another 10 or 20%, but I think that the bulk of the redemption of the deleveraging is definitely behind us, yes.
We also hear that most global funds are sitting on a very large pile of cash, unusually large portion of cash in their portfolios. Is that the experience at Credit Suisse as well?
Definitely that is experience both on the institutional side as on the private side. There is a lot of cash around waiting to be reinvested. It's difficult to time this reinvestment what will trigger their investment. But the cash, there is a lot of cash around, yes.
In terms of event risks, though, Filippo, what do you think might be the biggest event risk that we might have to face globally over the next few months?
Well, over the next few months, we will see a further slowdown in economy, and it can be that the concerns about deflation will be very strong. We don't believe that we will go into the deflation, but I can see over the next 6 months, given the very weak economic outlook, that people will be talking a lot more about deflation. So over the short term, the deflation is probably the biggest scary we will see. Over the medium term, as I said, when we see this slowdown fading out, I think on the energy and the oil side, we will see a very tight market, and this will be the next concern going forward. Not this year, will be probably next year or the year after.
Filippo, good talking to you. Thanks very much for taking time out today. That's the Managing Director of Credit Suisse Asset Management telling us most of the redemption pressures from hedge funds could be done, and they are sitting on piles of cash, but they just don't know how to time the redeployment of that cash.